I'm going to do the unpopular thing, but I could say that people right now, they're downplaying gold and silver, that it's not going to come back. It's going to come back with a vengeance, and it's going to hit new highs. Now, I'm not coming from it from the point of, the people that are actually always pumping this metal every time it hits a record high. They keep saying it's going to double. You'll see statements like that coming from these type of people. But I know what's going on right now. This is just a correction period. And the correction period is probably getting near the end. It's a matter of just how much time before we do some QE. But I want to go over some of the basic principles. Gold doesn't just grow on trees. It's very rare. We know about how much gold is available in the world, and it actually has been acting as money, as the default international reserve currency in one way or another. One way or the other. I mean, it's when Iran can't trade oil using dollars, guess what they get in turn for dollars? They get gold, right? So there's always a way around everything, and the way around everything is to use gold. As a matter of fact, that could be standard procedure for anybody. But you know what's going to happen? Most people and most companies, most nations are going to want to exchange fiat and want to hold the gold, hold the gold. It's in other words, good money drives out bad, and the good money is the gold, and the bad money is the fiat. I'm not just playing to the crowd here now because I don't know, maybe the crowd is getting pretty disillusioned with a lot of things that are going on right now. But the point is, you're actually sitting in a period that is the flat period before the storm. Sky looks like, well, I can't say the economy is sunny looking or the outlook is sunny looking, but the weather's going to fool you. There's going to be a storm coming up, and your major protection is gold, silver, even platinum and palladium. Now, I want to get into something here about, the basic with the fiat power, the fiat money power. It's confidence. It's confidence that, anytime you go down a store, you could buy something with fiat currency. Everybody knows this. On a practical level, that's exactly what happens. That's exactly what happens. But, in the case of hard goods going up in price, people have a tendency to start spending more. Now, I know that the banks and the big companies are mainly the ones that are hoarding the most cash, but even people themselves will spend on hard goods a lot faster if they feel that the price is going to double within a month. Say, for instance, you knew that gasoline was going to, well, you can't store that much of that, but say food was going to go double within a couple months. Would you store more? Yes, you would. And that could actually drive the prices up even higher. Fiat money holds purchasing power because of a belief that it's stable and will preserve its purchasing power over time. Now, people know it's not that stable, but they're looking at the metals right now and looking at other investments. Right now, they just want to hold cash. But like I said, this is a very temporary thing. It's going to fake you out, and all of a sudden, you're going to get caught on the wrong side of things if you get out of your metals right now. I don't think too many people are, but I would not. I know what's going on. I'm 100% sure of it. People lose trust, and a flight from the fiat ensues when they start losing confidence. And that is when they start seeing rising prices. Now, when they see rising prices across the board of everything, now we do have some type of rising prices, but the gold isn't going up that much, It has been the last couple of days, but, it hasn't been over the last several months. But we have been seeing rising prices, mainly in food, but that's just because of another situation. But it could be a factor into how people are going to start viewing things. And that has a lot to do with how something goes. It's confidence. As a matter of fact, what drove any market up a lot? It's the fact that people had confidence that it was going to go up a lot, right? What drives the market down could be the fact that people think that the market's going to drop down and they get out of the market. It has a lot to do with psychology. Markets have a hell of a lot to do with psychology, and a lot of these paper products can move markets further one way each direction. It's not even a matter of just supply and demand, but the paper markets can drive markets further down or further up by speculation, because it's very easy to buy these products to short or go long, triple or double or whatever. People will then spend the money as quickly as possible when they lose confidence in the fiat, buying tangible items in an attempt to get rid of fiat before it loses value. These are just the general principles, but let me see. I'm kind of driving home on something because you're going to see what I'm going to be talking about in a second. This increases the velocity of money, setting off a vicious cycle that destroys fiat purchasing power faster and faster. Now, one thing that's coming up is interesting. Now, this has nothing to do with the Bernanke policy, but it has to do with the weather policy. Now, the United States does produce a lot of its own food. Now, we can produce and buy food. We can buy food from other countries that aren't affected by droughts. But food prices are expected to skyrocket before the end of 2012 due to poor U.S. harvest. Also, there's more predictions that the drought that caused this poor U.S. harvest will continue throughout the Midwest. So, food prices is actually the number one thing. If you have an extreme hyperinflationary scenario, like 90% of your money is going to be spent on food. So that's what happens with the middle class. Now, I'm not saying to doom and gloom and right away, but this could be a factor into people panic buying, causing prices to go up even more. In other words, if you see food going up, there might be more demand for people to stockpile and store food that even bring the prices up even further. Now, I want to go over this one chart here with Weimar Republic again in Germany. This is a very good example of hyperinflation. Although we're not going to go into this type of inflation, the basic principles apply. And there was a long period of time here for, well, like about a year and a half, where they had these deflationary period where gold actually went down in price a little bit and just stayed flat. It's basically what it's doing today. Basically what it's going on today. Then all of a sudden things started taking off. I know what's going to happen. There's going to be QE, or else the whole damn system is going to fall apart. But it's not just that. Underlying this, there's a lot of places there, a lot of companies, and a lot of big money that's flush with cash. And there's a lot of money in the bond markets, in the U.S. bond markets. Once the bond market starts to freaking implode, guess what's going to happen to that money? It's going to have to find a new home. And it's not going to find a home in a lot of different currencies because those have been proven to be dangerous. You're not going to just jump into the euro or even a yuan. You're probably not going to jump into the dollar if you're getting out of the U.S. bonds. So what's going to happen? What's going to happen? There's not too many choices out there, is there? Especially if you start feeling that the stock markets aren't that good. You might be able to handpick stocks. But a lot of people don't do that. They don't have the time to do that, analyze everything. They just might go with gold. And that will actually create a hell of a demand on this product. So, and despite all the rumors out there that they can actually move the price of gold at will anywhere they want due to electronic manipulations, I say that's semi-hogwash. Semi-hogwash. I think they can move prices on a short-term basis, but when you're talking a global market to actually hold the price of gold down significantly for like a year, it ain't going to happen. It ain't going to happen. Yeah, I know it's a futures market. It's all on New York or Chicago Exchange, but what can you? It's not going to stay like down that long. They can't hold it down. If there's a lot of people that are actually going into gold for real and they're getting out of U.S. bonds, you're going to see the price of gold skyrocket. Because the U.S. bond is actually getting near a bubble right now, and I actually take a lot of faith in Mark Faber's words that that's probably the next big bubble, the U.S. bond bubble. And he also predicts that there's going to be a downturn in the stock markets worldwide, right? Plus, we might have a further slowdown in China. Which, if there's a slowdown in China, Australia is affected by that too, right? Australia is affected by a hard slowdown in China more so than even the United States. So, what that means? There's not too many places left to go as a safe haven, and it's going to be gold. That's why we might be sitting in this period right here. We're probably getting near the end of this period where gold prices were kept stable for a while, and they're going to start taking off. But but they're going to start taking off even further than they did before. Just beware of some of the predictions that are going to start coming out later on when people start seeing the gold prices going up, you know, and hit a new high. They're going to be predicting $3,000 in no time, $5,000 in no time. Now, honestly, I think the gold situation where it increased in price rapidly from 2008 to 2011, say September 2011, it's actually going to increase even faster than that, you know, this next go around. So, but no matter what, I know that every time the price of gold increases, you get these same voices out there to make these extreme exaggerations, and they'll tell you to buy it at the highs. That's really what they do. And I think they damn well know better. And they're pretty aggravating people. So I'm not doing nothing, actually. I think I'll probably sell some silver if it starts getting up record highs. Just a little bit, just to test the scenarios. And I'll be selling it in steps. I mean, if I'll sell some maybe at 50 something, just some. And then I'll sell some at 60 something and 70 something. And I probably think it's going to crash after that. But say it didn't crash at 70 something and went up to 80 something, I'll sell some. Say it didn't crash at 80 something, I'll sell some at 90 something. But I'm still going to keep the majority of it. But I'm going to do this very cautiously in steps. That's my plan. I think that's a pretty simplistic, easy plan. You might as well recognize some profits on some things. You know, you're not going to get rid of majority of it. Now, if I was Karnak the Magician, or if I had inside information, I could not put it out on YouTube because I would actually ruin it for myself, because everybody would know the game. And that's exactly probably what happens with a lot of the people that are in the silver community that have been around for a lot of years. They're constantly just going to tell people to buy, 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 buy. It doesn't matter what the price is. Oh, God. Yeah, it does matter what the price is. Maybe in the long run it's not going to matter what the price is, depending on if you have the balls to sell or not. But I got a feeling that in the long run, the middle class is going to get screwed over with silver and gold, because they're going to be buying it at the absolute high, because people are going to say there's no way you can lose. I know this. Nobody likes hearing this. But right now it's damn dirt cheap. So, it might go down a little bit, but it's not going to go down that much. It's not going to go down that much. But if you're already invested heavily in gold, silver, platinum, and palladium, I would not see any reason to buy more unless it really drops very hard. And, then buy it. I don't expect it to drop that much further. So it may just be I'm just holding on and see what happens from here. But I do think that we are in this deflationary fake out. That's all it is. And, even though they're pumping more money into the system, nobody's spending it. That's the whole point. Nobody's spending it. Big companies are afraid to invest and go into new ventures. There's this fearful outlook out there about the economy in general. So everybody's being real cautious. But right now they feel safe holding dollars. But like I stated, one little area that's going to probably go up quite a bit due to a drought, not due to actually economic policy, is the food prices. But that could actually lead to other things. Now, assume possibly there's a war with Iran. We don't know this for a fact. I mean, it could happen. Yeah, I know. You know what? I'm going to tell you something else about it in the military. Even when they think they have everything planned, plans change. So nobody knows the future on that stuff, no matter how much in the loop they are. Nobody knows the future on that stuff. But say, for instance, the oil prices get jacked up due to conflict with Iran and food prices. What's going to happen to gold? It's going to go way the hell up. Way the hell up. It's going to keep pace with the cost of inflation as it goes up. So do not sell it now. And actually, if you don't have any, that's a pretty decent time to buy. It's right around the low. It's not that bad of a price at all.